Video 3 of 3 on Mother's Day. Yes, we do work on Mother's Day. And if you're a mother and you're watching this video, what are you doing? Go enjoy your day. Okay, so we have rally, dip, rally, dip, rally, dip, and each one yielded a lower low. One can argue that this is not yet a lower low, but therein lies the risk. So if you get the 63, which is a pretty strong prior bounce, see, it's starting to glow orange that you're going to probably get the 60 and a half down here. So you're at risk of doing this. You dropped, you consolidated, and if you lose the consolidation, you may continue dropping. Earnings is not until 80 days, so they just reported. Oh, this is Oxy. Awesome. If you've been with me a while, this has been a trip and a half. Fun trip, though. Fun trip. Needless to say, I picked a fight with Warren Buffett when he was all into it. So I took on a lot of hate when I said, "What are you guys doing? Going long Oxy at an all-time high." Warren Buffett is doing it. You're an idiot. That was the response I got. And I just, I shorted almost every rally, made money every time. I think maybe except one time. So good company. Just people's expectations went crazy. My response is Warren Buffett doesn't buy a company in order to make money off the stock price. He wants it reported on his financials. He probably is buying cash flow or something like that, which is not the same. So don't invest like a whale. We're not whales. Okay, so technically you do have support, but you're also at risk. I wouldn't add longs. I can nibble if I don't have any. Path. Earnings in a couple of weeks. Okay, so it does have support. High or low is good. So hopefully before the earnings, they take out 20.3. So they can get some breathing room into 2150. Until then, they're selling rallies inside of a descending channel. Nothing has changed. I thought from here, I drew that they would come down to here. They did, and then some. I thought this would be the target. So these squiggly marks I made before. So let me walk you through how they happened. Okay, so at some point before, I said maybe they bounce and drop into this area. And that's exactly what happened. In fact, I don't cheat, so I'm going to leave them there because I have a recording of it, and you just saw me live doing it. So now I'm going to say the R is also available down here now. Right there. Anything above 21 should be very difficult to overcome. So target met. They're coming out of the bottom. Now they have to face the ledge from which they fell apart. Pfizer. I thought it was a good deal down here. I don't think it's a good deal up there. You have to study the company. Technically speaking, it's pretty frisky. Above 28.80, it could get to 30 and a half. So respect it. Buy the dip. You have buyers, solid buyers below 27 if you're a trader. And if you're an investor, leave room to double your position. Palantir. How many times have we discussed Palantir? Many times. And we were long Palantir from 11 to 7. Up here, our answer is always no, not an obvious entry point. I like the company. They're seasoned veterans. It's an old company. It's not new. They're the forefathers of AI, so to speak. They have a great business going. I think I'll get it lower. That was my answer. And it was in the middle of the 20s. When it was under 10, it's hard to convince people to go long. But up here, everybody wanted to go long. So I'm going to tell you now, if it loses 20, you're going to get it at 16.50 or at least at 18. So if you wanted to go long Palantir for the long term, it's a good company. It's a viable strategy. Just leave room to triple your order because markets have never been higher. Just assume you go long here. 3 weeks from now, something happens in the world. The market's correct, say 10%, 3%, 12%. I don't know. They correct. All stocks are going to fall, regardless of how good this entry point is. So leave room to double that. and then add more. Technically, it's susceptible to get down to 1750. So it could bounce. So I wouldn't short it, but I would not invest in it from here all in. I would leave room to more than double my order. So there is another way of going long by selling puts. We discussed it live in the last week. I can sell a put and I may be assigned the stock or not. If not, I make money. If I get assigned, okay, I bought 100 shares. That's another way of doing it. So I have my alerts. I have my alerts and I would act on my alerts. PayPal, same strange behavior. The business was, the stock was trading like it's going out of business. Look at this. I remember being long and we struggled with the longs. They paid out, but oh my gosh, I was like, what is happening with PayPal? Turns out it was trading with crypto. And remember what I just said about Bitcoin? Okay, I bet you anything, if crypto falls apart, PayPal and Square are going to lose bids, and you're going to look around and say, what's going on with PayPal and Square? It's crypto. So if you lose 61 on PayPal, you're going to 56, maybe lower. It is support until then. And look at that. What I drew came to fruition perfectly. Again, this is from here. I said, what if we come down, pop and drop, we'll get to the circle. Look at where we got to the circle. So this forecast has been met already. All of this stuff has happened. I'm going to leave it there because it also can be a talking point that we're falling to test that area of support. And if we lose it, we're going to repeat that area and come down there. So I'll show you the visual. Let's say they do this and bounce. This is the next area, the target. There will be a bounce after this drop, bounce, drop, and bounce. So this is a potential. So it means what? Yes, it's falling into support. If I'm looking to trade it, I can go along with a stop. If I own it, I don't do anything. I have relief. And look at the sellers. Anything above 68 looks impossible to penetrate anymore. And check this out. Remember this white line? I don't know when I drew this. Look at it. It is not a coincidence that it did this. Rig, very active stock. Used to be in the news. It used to be a good trader. Like it was a good trading stock with options. I haven't done that in a long time. And you have sellers above 6.4, buyers below 5.2. So you're stuck inside that range, and it's a pretty violent range. Unless you're actively trading the stock, what are you doing? Is it investable? I don't know. What's the thesis to invest in this company? Maybe it pays a dividend. Just make sure you know what you're putting your money into. Okay, it's not my stock. I put a box at some point, probably from one of the earnings reactions, and they haven't been able to crack above it. I put a line, and it's been death. So you're facing sellers anywhere above 6.2, 6.4. Now, if you take out 6.8, maybe you get to 8. And you have a lot of buyers into 5.2, 5.3, and more buyers into 4.6, 4.4. Lose 4.4, you go to 3.2 probably. ROKU, it's a buy the dip into that older consolidation zone, the red rectangle. And now it looks like it's sell the rip anywhere around 66. You see the 3 lines. The first 2 are super strong resistance right here, right now. So if ROKU loses 56, it probably goes to 46 or lower. The technical target, if you lose 56, is, I'm afraid to say it, to scare people, it's more like 29 to 31. Now, there's no imminent scare of that because you have a lot of buyers at 52 and more buyers scattered below that into 40. But you should know that that's a risk. In 2023, it was 38. So it's not that crazy. But I wouldn't short it. In fact, I would go long on bad days. It fell 4% on Friday. Huh. Interesting. All right, let's see it up close. Yep, all those comments still work. RTX, Raytheon. This is a war headline stock. I don't know why people are buying it like it's hotcakes. So unless they provided a forecast that says, oh, we're going to be growing in sales, the P&L does not reflect the price action of the stock. So be aware of what you're chasing. If you're chasing the meme of we're going to war with Iran, therefore I'm going to go long RTX, you should first look into the dollar that comes from that. I don't know. I'm asking you to push back. They have no margins. They're so good at their operating margins, but their cost of goods sold are hideous. So they're not very efficient that way. You need to find out where the money comes from. Okay, so hopefully this breaks it out. Collins Aerospace and Pratt & Whitney. So figure out which one is actual war. And then, so revenue, maybe they'll break it out here. Nope. Of missiles, right. But how much money of their income comes from missiles? Like they have 3 different companies, it looks like. The orange one, Pratt & Whitney. What do? Motors. Collins Aerospace. That doesn't sound very war-y. And Raytheon. So you have to know that if it's Raytheon that brings in the money from headlines of missiles, it's only 1/3 of the income. Thereabouts. Right. But anyway, my conversation is that the P&L doesn't reflect all this new missile sales. They're not there. What the hell are they? If they're selling more missiles, why is the sale bar not higher than this? And these are quarters. That's all I'm saying. Why are you chasing it into new high? Technically, you could be breaking out and you could get to 128. So I wouldn't short it. I just want you to have the right expectations in it. Okay, Sunrun, I have them for solar, and they are not an organized company. And I've referred a couple of friends to them, and they had similar experiences. And I honestly don't know what's going on with it fundamentally. Now, technically, this stock has been descending in a very tight wedge. So if they hold 8, they should be going to 22 eventually. But losing the support they just put in place means that they're going to go down back to the 5 area. Note that I got solar, I don't remember, 6 years ago maybe. The first thing I did was sell a put on Sunrun at 5. And then the stock took off and never looked back. I thought I would be able to sell puts and make my money back of what I am going to pay to them. They never gave me a second chance. So it's not like 5 is impossible to redo, and it's fundamentally it's not a great company, but it is tradable. If you hold these lines, you might end up at 17. I would exit there from a trading perspective. SAVA, you have buyers at 18 and buyers below 16 and sellers above 23. Anything above 23 is being sold hard. StarBucks, I would have gone longs. I think I shared longs. I definitely discussed longs live with people. The company is fine. It's falling into a must-hold support. And if you lose that, you end up wherever, which is pretty crazy. But is it? So if the stock market corrects, it's not that crazy. Starbucks can be in the mid-50s. But all by itself, it's not that bad. The P&L is still growing. Nothing has changed. Some people were complaining about something specific, and I can't remember what it was. Labor? Something like that. Anyway, I see it at 79 potentially. It's doable. I see it at 73. It's doable. Whichever way it goes depends on the market in general, I think. It's a trading stock. It's an investment. Take half of a position and add the second half if it collapses. Shopify, I cautioned against it, and against caution, I said, okay, I could go long knowing it's going to be in trouble. So I would sell a put spread, but I also know that the put spread is going to get under fire. And if they don't recover 70, they're probably going to 51 or 52. Okay, and I know that, and I sold the put spread down there, not huge, but I know that's going to get in trouble. So this is solid lines. I said you lose this, you go to here, and they went to there, and this is the target once you triggered a bearish scenario. So that bearish scenario has a target of here, which triggered that got us to here. So it's not a bad company. The expectations were misaligned with what happened in reality. That's all there is to it. Silver, gold made an all-time high. I don't think silver has. So that's not good for silver. I would buy the dip in silver. I wouldn't short it. I wouldn't go long here. Silver has a pretty particular ETF you can use to trade it, SLV. This is the one. And I wouldn't do spreads in it, and it does give a lot of clues. So look into the options chain for unusual options, not to chase them, but to tell you where support and resistance is. And I would do single legs at the money or in the money and put time on the clock for whatever your thesis is. I'm not trading it right now. I will in the future, though. I have support in 225, resistance into the high to the left. Snow, I believe we sold a put spread that was in trouble, and then it was fine. And so we caught the falling knife on the way down here. And we survived it. So I see no reason to add. If you twist my arm right now, I would do an iron condor for 3 weeks out. Oh, never mind. I wouldn't do anything there, or earnings in 10 days. So this one is an independently box for me. There's support at 153 and sellers at 162 in the meantime. SOFI, I don't mind it in the sixes. I definitely minded it up there when everybody was interested in it. And I haven't had anybody, very few people came to me about it. I would sell puts to own shares. I would own some shares. I would leave room to own more lower. So I think it's going to give us one more entry in the low sixes. If it doesn't come out of 730, it might come back down to retest to 660. Lose 660, and you're probably going to lose 6, and that would be a good entry point for the long term. SoundHound reported earnings. You can draw a box around that and say, okay, that's my playground for now. And the reaction to the earning was pretty violent. And so that's your playground. Sellers, buyers, very simple. If you're an investor, this shouldn't matter. Just don't add. TLSI. Life Sciences. Okay. I don't know what Life Sciences is. Yeah. Earnings in 3 days. Chart like this, I wouldn't touch it. TMUS, and these guys changed the cellular business for everyone. I think this is still available. If they don't make a new high, they're probably going to end up at 154 at some point soon. Earnings, they just reported earnings, so it's going to be difficult to break out, even though it looks easy. I think it's easier to come down to 152. That's target 1. 144, target 2. Travelers, not an obvious entry point on a daily chart, so this is a fairly slow comment. You have sellers extended from here to 226. Ooh, there you go. You can see it now. How about we put a box there and give you a visual as to where the limits are on this rally, on this drop. So if I zoom back out, okay, I zoom back in, I make it available globally, I zoom back out. There it is. So there's your box, your sandbox. So I don't get long in the upper ends of it. I don't get short in the lower ends of it. And if you lose 202, you're going to get to 188. This gap, I don't know what that's all about. This tells me it's an NVIDIA-like improvement in sales. Where is it? Okay, so if you don't see it on the P&L, then you have to ask yourself, how long before they fill this gap? Which means what? If I'm an investor and I'm long already, there's no way on earth I'm adding anything to my long right now. I'm not looking for perfect entries and exit. This is not what I mean to do here. I'm not looking for perfect entries and exit. I'm looking to avoid the easy loss. That's it. Tesla, I've covered it perfectly, like freaking perfectly. There's nobody that had the drop on Tesla like our group. when it was in the 200s, I told you the 140 was a possibility, and I called it down for months, for weeks at least. And then when it hit 140 and it bounced, everybody's saying headline, headline, and I called the bounce and the drop after that also. So what does that mean? Stop listening to experts out there. Just trade the stock chart and use just common sense. And I'm going to give you the common sense on this one. This is the target we had set. This was an overreaction based on a bullshit headline. And I'm saying it, forgive me for the cuss words. In fact, it was 4 or 5 headlines blended in order to make people money and give them an out. Anybody stuck in Tesla from up here that didn't go out here, they need to next time do that. So do I short it here? No. It's in the middle of the range. There was BS here. There was BS here. Somewhere in the middle lies the truth. So I'm going to give you 2 things. If you take out 198, you're probably going to go to 228. If you lose 140, I hate to say it, but there is a conversation that talks in the middle 50s for Tesla. I won't go there. I'm just going to tell you yet. We're in the middle of a high and a low. Those are your bumpers. 160, 183, 188 is exit zone 1 for the bulls, and then watch for the breakout. Anything that covers the gap down below is a buying opportunity with a tight stop. So there you have it. Short term, last week we talked about 172, 170, and 166. After hours, it went to 167.5. I had targets for the SPY that happened after hours. The market is being heavily manipulated. Heavily manipulated. If you don't act with knowledge on the charts, you're going to fall prey to that manipulation. Luckily, we have eyes on all the lines. You see them here. That's why we do the homework, so we're not blindsided. So Tesla, if it finds itself in the 150s one more time, don't be surprised. It had unfinished business from this BS rally. The drop happened orderly. The rally came too fast. They may have left some weak spots. Go long into these weak spots for a trade. If I'm long Tesla, I am not adding here. If I wanted to invest in Tesla for the long term, I would take a nibble. Take shares. Time is not an issue, and don't go all in. This way, if it gets cut in half and you still like it, you have the opportunity to add some more and make for a better entry price. That's how you manage risk. Or even better, if you wanted to buy 100 shares, if I wanted to buy 100 shares of Tesla, I would sell puts every week. Every week. It makes me hundreds of dollars until I get long. And when I get long, I keep the shares like I bought them today. So anyway. That is another way of looking at things. Taiwan Semi, a huge pop, great P&L. It's so great, it's almost fake. But don't mess with it. Fundamentally, this is an amazing company. So rallies into an all-time high, to me, are not instinctive entry points, regardless of how amazing company it is. If it gets to 154, I would short it with a debit put spread. Actually, it's shortable here with a debit put spread if it has any premiums. Just for a dip. That's it. Just for a dip. I would not start longs up here. See, I'm looking at the P&L and I don't see an explosion in sales. Like, where is the sales explosion like NVIDIA? And why is it up so much? I did not read the report. I can go read the report and see. I will do that. So in fact, I'm going to put it here just so I'd force myself to check it out this week. Not an obvious entry point is the answer to TSM for an investor. TTC. Toro? Is that the sprinkler company? Huh, who knew? I need to go to Home Depot. All right, seller at 92. Don't take my word for it. They're right there. Seller at 90. Now, if you take out the 90 seller, you probably can take out the 92 seller and get to 94 area. That's the upside scenario. You do have scattered support, and you don't want to lose 84. You lose 84, you get to 80. So you're right in the middle of a trading range. Earnings in 25 days. TWLO. I went long TWLO on the dip for us, I do believe. And you need to hold. You have support at 57, and you need to hold it. If you lose it, you're probably going to 53 in spite of support at 55. And look at all those sellers. inside that one candle. All those sellers. So in order to get up above 62, it will take a freaking miracle, technically speaking. And if you get to 64 and you take that out, you may get to 67, and I would exit my longs there. Uber, they rallied into the earnings, they gave it all up, and now they're in the middle. Support at 65, and if you lose 63.5, you go much lower. What do you mean much lower, Nick? Look at how far down it is. Is it? It is not far down. Okay. What? 6 months ago, it was in the 50s and 40s. Yeah, it's not that far. Anyway, so if you lose this guy right there, you're coming down to here. That is a fact. So let me show you. No, it's not a fact. It's my opinion on a chart. That is a potential path if you lose that area. So I'll put an alert on 64 saying, kind of a deal. And rallies into 74 or higher, I'm going to repurpose and reuse. This is going to be sellers. Same as this blue one up here. I don't know what that is. Probably a reaction to some earnings. Anyway, that's all there is to it. The best entry point, anything below 50. In fact, I'm going to put an alert here. Sell puts, buy calls. Aggressive long. UNG. I sat on my behind too long. I wanted to go long UNG shares because I knew it had a good rally coming. I didn't know. I thought it was worth the risk with this descending wedge. I just didn't do it. Hopefully you listened to my words and did it on your own. If you did, this is not a good starting point anymore. You missed a lot of the rally. So resistance into 18. Actually 1750. Buy the dip into 15 will probably be easier trade. It is in the hands of the bulls though, with a higher target potential. USO, that's the one we made money on, a pretty good short. As an American, I want this thing to get collapsed because that means more money in the pocketbook of the US, and this path is still available. Let's hope it happens. We do have sellers at 78. If you want to put a visual of it, I probably have it on one time frame or another. There should be resistance above here. So if you lose the support that you just placed, you're going to lose the support that's here. There is support here and end up here. Here being 71 or lower. Hopefully that's the path, because then really the inflation would have, the rate of inflation would have stabilized. Not inflation come down. It's not coming down. When they talk, we controlled inflation. They're not thinking bringing it down. They're thinking having it stop rising at such a fast pace. Verizon, not an entry point into 48.8. I've sent out notes every time it crashes. Buy it and hold it because it pays a great dividend, and the P&L is super stable. This is the Apple of cell phone providers. Okay. People who have it think that they have a deal that's better than everybody else, and it's not correct. I have better signal than Verizon, and I'd be with Verizon people and show me your phone. I have better signal. T-Mobile's top tier, whatever, 5 Go G5, whatever it's called, cost me about $50 extra a month, but it's worth every penny. It works everywhere. So 40.8 is resistance, 41.4 is more resistance. Support into 39. You lose 39, you're going to the low 30s, and that would be a good entry point. Up here, for me, Verizon is not a good stock to start longs. Doesn't mean you short it or get out. If you bought it lower, you're making dividends. So that's the point. Fixed income. Not an obvious entry point. It's vulnerable to come back to 60. It could reach 82 though. Wolf, I would not trade the stock. I have tried. I've nailed the entries, nailed the exits, and they still screwed me. Options-wise, very bad trading options. If you invest in the stock itself, company, that's fine. You have a strong buyer from the earnings report. The May report flashed low, and they hated it. So they bought it with ferocity. So I would imagine that there's a lot of support down here. So if I own shares, I'm not budging. If I started buying shares, that's fine. Leave room to add. I would avoid the options. XLI. I'm long and losing because last week the XLI rallied with the banks like you wouldn't believe. So the thesis is still there. The technical reason I went short on the XLI is still there. The position is not still there. It's bad. So I will decide this week whether to call it quits or not. And if it breaks into an all-time high, that means the whole market is rallying. So if I'm short the market and this at the same time, and I don't quit one of them or hedge them, like you can hedge. If I decide that it's going to 132, I'll buy naked calls to offset my losses. And this way I temper my bearish scenario. This is a bullish chart, bullish move with a bearish setup. Those two arrows are still viable. The scenario that unfolded last week is as bullish as I've ever seen in my entire life as far as the market is concerned. I'll make my point, that point, in the video of the Sunday night video or the Monday morning comments. And it's I have never seen a scenario like this before where the stock market is at an all-time high. The economy is doing too good to the point where the government was trying to cool it down, but at the same time also trying to infuse some free money. And on top of it, they tell us we have a QE program set to go 3 times this year, QE-ish, 3 times this year and 6 or 7 times next year, rate cuts. I don't understand what's going on. Why? What? You see the confusion? You can't have all these things happening at the same time. 2 or 3 of these things need to flip upside down. I don't know which one. Either the economy will take a poop, the government will be completely wrong and has to raise rates, or something. Something's got to give. So anyway, XLI is rallying. The industrials have stocks like Caterpillar, which is insane, and it's recession proof, I believe. So I may have to call it quits on that one. The Dow, YM, anything I'll say, it'll be in the Sunday night video. I don't know what you're doing with these. I mean, you put them in the Sunday review. That's a couple weeks back to back. I don't mind reviewing them, but I don't trade futures overnight. I don't hold the futures, so you must be trading the futures, and this conversation is not going to help you. Pop into the live room. We'll cover them live. So same comments I make. Every comment I make about the Dow will apply to this one tonight. Same with the ZB. So I shorted the TLT. I went long the TLT for us, and I exited at the very top. I sent out a note saying I'm closing my position. I can reopen it now, and I would stop out if it goes below 11524. If this one loses 11524, the TLT or this one, they're both long bond prices, is going to take a huge dip, which means, anybody? Can you tell me what it means if this happens? If this trigger, if TLT or this one lose support and we come down here, means there's a big rate hike. So it means that inflation reports were not so great. And you have sellers above. And there we have it. With the conversation about the TLT, we end the 3-day Mother's Day stock review. If you're watching this on YouTube, let's discuss in the comments. And also hit the like button and subscribe.